Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors. Happy Wednesday and welcome to 7 Investing Now. My name, of course, is Daniel Brooks Klein. I'm the host of the program. I'm being joined today by Steve Simonton live. Steve, welcome to the program. And then later in the show, in the home stretch, I did an interview with our very own Anirban Mahanti on Tesla's blowout delivery numbers. Steve, you follow Tesla. Were you surprised that they had a record number of deliveries in a quarter where they weren't shipping very many of their expensive models? These are mostly Model 3s and Model Ys because they're refreshing those models. And they hit and we're in a pandemic. Who's buying a Tesla? Did these numbers surprise you?
I'm surprised by nothing with regard to Tesla anymore. So that's kind of the trouble, is that it's surprised, not surprised. But what was really notable is that they delivered a record number of vehicles in a quarter that is historically really weak for auto deliveries, and that was kind of the impressive part. But it also helps that they're scaling from such a small base and struggling to meet demand. So surprised, not surprised. So that's kind of where I stand.
I was surprised because even, 7 Investing is doing great. We have jobs. My wife has a job. Your wife has a job. I'm not buying a Tesla because we're in a global pandemic and you don't know what the future looks like. We would like your questions. We would like your comments wherever you're watching this, but we're gonna do something a little bit different. Off the top here, I am going to talk a little bit about the Olympics. And we don't think of the Olympics as a business story usually. But there's been a little bit of noise out of Washington. The president has said he's going to talk with our allies about whether we should boycott the 2022 games in Beijing. Now, I understand the statement being made. There's all sorts of human rights abuses in China. There's all sorts of problems. On the other hand, we're not boycotting Starbucks. We're not boycotting Disney. We're not boycotting Apple. We're not boycotting Nike because all of those companies have a mutual relationship, a mutual benefit. So let's say this was to happen. I don't think it will, but let's say we stayed home from the 2022 Olympics. Why is this a business story? Because Comcast's entire strategy, maybe not its entire strategy, but 80% of its Peacock strategy is based around the Olympics. So they've got the Olympics in Japan coming up. The following Olympics would be the Olympics in Shanghai, China. Even if they still broadcast them, Steve, do you remember the boycotted 1980 Olympics? I mean, you're a little young for that. Nobody's watching the Olympics if the U.S. isn't there. There was a joke on The Simpsons where Krusty lost his shirt because he had, the American won, you got a free Krusty burger. And of course, in every race, the American won. And the illustration on The Simpsons was the American swimmer jumps in and swims. The other swimmers just jumped in and flailed around. Like, that's what the Olympics would look like. But besides the reprisals that Comcast will lose $1 billion and however many future $1 billion, that puts Starbucks at risk, which has a huge business in China. It puts Apple at risk. It puts Disney's business at risk. It puts Nike's, maybe not their business at risk because Nike could move manufacturing, but it does put a lot of Nike's business in peril. Yeah. And more importantly, Steve, do you know where the Olympics are in 2028?
They're here. They're in LA, right?
They're in Los Angeles. My brother's former boss, a guy named Brian LaFamina, is the chief marketing officer, the chief business officer. I forget his title, but I'm following the progress of the Olympics. And this is a 10-year journey, basically, of lining up sponsorships, of creating this massive hotel opportunity. Like, this is huge business. So look, I don't think this is going to happen. I think this is saber rattling. I think the domino effect of this effectively ends the Olympics, because if you don't go to the Olympics where the country the Olympics are isn't a friendly country or does some things wrong, you're pretty much not going to the Olympics. So there's 2 options here. Have the Olympics someplace neutral every year, which I actually don't think is a bad idea. To just put the Winter Olympics in Canada because the time zone's good for the US, and the Summer Olympics, I don't know, Australia. Time zone's not great there. That's not going to happen. So, Steve, do you think there's any possibility the US sits out the 2022 Olympics?
There's a possibility, but that also comes with a whole lot of heartbreak, not just from the athletes and themselves, and yeah, it's we have a lot of the top athletes in the world, and it would be like, well, what's the meaning from an athlete's perspective? But also, yes, the economic fallout would be huge, and on both sides. But at the same time, we have China. I think a few days ago, I saw some articles that China is encouraging a boycott of all U.S. brands because of this. And you have Chinese sort of counterparts to Nike, for example, that are stepping in and trying to seize the opportunity. And so there might be some near-term weakness in China as they encourage a boycott of American brands. But I see it as unlikely that
we're at a very perilous time. And I'll joke a little bit, like this could be the break Luck and Coffee finally needs. But here's the reality. China has built its middle class somewhat on American brands. Like Starbucks is a status symbol in China. It's a status symbol in the US to a point, but not on the same level. So I do think there's going to be a lot of rhetoric. I think there might be some stock market regulation, but I don't think we're going to go back to the Trump days of unilateral bans. I don't think we're going to be kicking companies off stock exchanges, but I do think there is more going on with the US and China, and the Olympics might be the lynch point for that. China does not back down. This is not a country where if you had done this quietly, there was a better chance of China making some concessions than doing it publicly. There's an entire, and I did a lot of shows with Ben Ra, one of the Motley Fool's experts, on that market, where we really got into the mindset of the Chinese government and the Chinese people. Overall, there is very much the government is the people. And if there's a perceived threat, it's seen as a threat to all of China. So, when you see something like the protests over Disney's Mulan, that movie tanked in China, and it was largely made to do well in China. So there is absolutely something here. As an investor, look, I'm not investing in Comcast anyway. I don't think they're a great business. I like the theme park part of their business, but I think they're a second-tier movie company. They're a terrible cable and internet provider in a dying business. So yeah, I never miss a chance to bag on Comcast. But that being said, Nike, Starbucks, and Apple are really important companies, and all of the peripheral companies that advertise around the Olympics, that do business around the Olympics historically, and this is a winter Olympics. Thank you for that comment. Historically, the Olympics is a massive advertising opportunity that generally takes, years of planning. You remember the old Dan and Dave commercials. I believe those were Reebok ads, not Nike ads, but I might be wrong, where it was two guys who were supposed to medal in the decathlon, and it led up to the Olympics, and one of them didn't even make the Olympics. We're going to pivot to what we're watching. We're going to talk about Virgin Orbit heading towards a SPAC. Before we do that, let me remind you, get your questions and comments in. We have an interview coming up with Anirban Mahanti about Tesla's blowout quarter. So we'd love your questions about Tesla. We'd love your questions about just about anything. But Steve, the news came out yesterday that Virgin Orbit was going to go the SPAC route. They're looking to raise a few $1 billion.
Right.
I did not know that Virgin Orbit was a company. I just assumed it was part of the Virgin Galactic umbrella. Can you explain a little bit about what Virgin Orbit is and why we might be excited about it?
Yeah. So, and to clarify, there were more rumblings yesterday about it. The original news actually sort of surfaced a few weeks ago from a Wall Street Journal report, but Virgin Galactic is indeed a separate company from Virgin Orbit. So keep in mind, Virgin Orbit actually was a spinoff of Virgin Galactic back in 2017. It was then known as its Launcher One rocket program. The two are often confused, but there have been several instances where Virgin Orbit has released exciting news, like a couple of months ago, their first successful launch, and Virgin Galactic stock actually rallied in response. That was sort of a guilty by association rally. They're separate companies altogether now since the spinoff in 2017, but they're under that same Virgin umbrella. I believe Virgin Orbit is still 80% owned by Richard Branson, and maybe there's a Saudi Arabia wealth fund or something that owns the other 20%. But what does it do? It specializes in launch solutions for small satellites. So its platforms basically enable the launch of payloads and satellites into space for other companies. So that's kind of how it functions, and that's what the market it plans to tackle.
Steve, why is this a separate company? It feels to me like these should be under the same umbrella, and because the difference between space travel, which is large, so that the business of the original parent company was gimmicky short orbit trips, though you did show me on our Slack that it really is like a 4-day adventure. So it's more akin to like paying $5,000 for a 3-day stay at like the Star Wars hotel that's coming up at Disney World, where you really get training and a whole experience in addition to that short suborbital flight. But the real money is going to be business travel. It's going to be going like New York to Australia in 2 hours and charging, $22,000 for that seat because business people are going to want it. That doesn't seem like a big leap from, shooting payloads into space. And I understand that they're using a stand-up rocket instead of like, there's definitely differences. But is there a reason these are separate companies other than raising money?
It's even more similar than you think. One of their rocket launching platforms drops off of a Boeing, kind of like Virgin Galactic's. And so then it goes sideways, and it's sort of more economical that way for them to do it. And there's a reason they were one business just a few years ago, because they are so similar, and they both operate in different aspects of the broader space economy, which is already enormous and growing quickly. But one of the big differences, well, I think it comes down to two things. Shareholder value. So they could sort of squeeze more value from it as a separate company. And sort of in the spinoff a few years ago, we saw them kind of explain that sort of spinning this off allows them to better position themselves to tackle this market on their own, kind of as an independent company. Apparently the strategic rationale behind it was that this can be its own thing, and we can not only generate more value for shareholders, but better position the company when it's not worried about the other side of the business. So that's kind of why they're their own thing right now.
So this was valued at about $1 billion at its last funding round. Now it's they're speculating 2.5 to 3 billion. Steve, how much of this is because of things like the ARK Investing Space ETF and other sort of rushes to invest in space? By the way, a space ETF which includes shares of John Deere. So they're being very broad in their definition of space. Yeah. But how much of this is just like stick the word space on it in order to raise money, where there's a lot of potential here. There's not a lot of reality. There's not going to be financials to look at when they when they go public, because to have financials, you need to have revenue.
Right, and I think they're really riding the coattails of that successful January launch, and it's a huge market. Launching small payloads and satellites into space, and they're not alone. There's a couple. I think it's ABS, and then there's Rocket Lab, and which is also going to go public via its own SPAC. But this is it's a big market, and I think we'll see revenue before long. And they've successfully demonstrated their platform. So the valuation might be a little rich when it comes out. But Rocket Lab, I think, was looking for a $4.1 billion valuation with its already announced SPAC. And these guys are looking for 2.5 billion to over 3. So we'll see what it actually ends up coming in at. But I think given the size of the market, I don't think that's out of the realm of where it should be. So we've yet to determine who the SPAC partner is, of course. And it could be any day, it could be any week, it could be any month. And then once they announce it, probably going to be another few months yet before it's actually publicly traded. But I think there's going to be pretty high interest and pretty high demand because, as you mentioned, ARK's Space Exploration ETF has some names that maybe aren't so directly related to space, and they face some criticism for that. And there are other ETFs, like I think the UFO ETF, that's more of a pure play space ETF. But this will help round out sort of focused genres like that when it comes to actually investing in the space economy.
We're going to take your questions and comments after the interview with Anirban. I will say this about space. There is money to be made in space. There is absolutely going to be space tourism. There's going to be space business. There's going to be, travel opportunities. There's also going to be a huge opportunity in cleaning up space. There is a lot of space debris out there that will cause problems. That being said, all of these companies are very, very early. Even if you look at SpaceX and other good, Blue Origin, the Jeff Bezos company, right. These are companies, or Blue something. I think I'm getting that name wrong and confusing it with the dog. Yeah. Is it okay? It's close to the dog food brand where you get the really fresh
Blue Buffalo, yeah.
Blue Buffalo. I knew I was close.
Space exploration. Yes.
This is one of those areas where it's great to invest in some of these companies. There's a lot of upside, but you probably want to be careful with how much you own of any of them. These are generally companies where a little is probably a lot, because if Virgin Orbit works, it's likely to be a massive, massive business. If it doesn't work, it's likely to be a news story with flames. Like, so, and I say that facetiously because there's lives involved. So let's hope those flames are a test flight or not something where there's a person there. But this could go really, really well. There will be winners. There will be losers. There will be massive expense going into this. Steve, we're going to go get a cup of coffee. We will come back with your questions. Mike, Zufkar, we see your questions. Happy to take them afterwards. But right now, I am very happy to introduce our 7th lead advisor, Anirban Mahanti. Yesterday at about 5 in the morning Australian time, we recorded this wonderful interview on Tesla's blowout quarter. Sam Bailey, if you want to hit the tape. And this does not appear to be working. I don't know exactly what went on there, but Sam Bailey, if you want to jump on and tell us what is happening, that would be appreciated. Oh, we are trying again. I believe I am still on. Sam, is the video just not playing?
It's not playing. It says that it's playing, but it's not actually playing.
It worked well in our test. This is the joy of doing a live show. Here's what's going to happen now. Sam is going to message Steve so he comes back. We will take. So there he is. We will add this interview in post-production. So that'll be on 7investing.com/live stream. That'll be up on our YouTube channel. We can share it out on Twitter. These things happen.
Answer questions. I'm going to delete it, try to add it again, and see if that works.
We are going to do that, and hopefully we'll get to the interview.
This is our Tesla Cybertruck broken window moment. That's what it is. It worked a minute ago.
I would have finished drying my hair had I known this was going to happen.
Hey, this is the fun of doing a live show. Steve, if you want to read the question from Zufkar on Tesla, that would be a great place to start.
Right. He says, in your opinion, will Tesla be able to produce cheaper electric cars? What competitive advantage does Tesla have over other automakers? That's been beaten down pretty good, one of those questions as far as their competitive advantage. I think a big thing is the technology platform and their ability to, their sort of head start they have in self-driving vehicle technology in particular. They obviously don't have a advantage as far as manufacturing goes at this point because everybody else has the scale. But that is the plan. If you're asking, in my opinion, will Tesla be able to produce cheap electric cars? Absolutely. They've announced that they want to have a $25,000 electric vehicle to basically spur mass adoption. And yeah, that's the plan for them to be able to produce cheaper electric cars over the long term, even cheaper.
Steve, I think it's going to be cheap to a point.
Welcome back.
There is a
Seven
value.
Investing now.
Hey, and here's our interview.
All the way from Sydney, Australia. I don't think we're ever going to tire of saying that. By our friend, our fellow lead advisor, Anirban Mahanti. Anirban, it's 6 a.m. there, but you are raring to go. I assume you've boxed with the kangaroo, you've pet a koala, you've done all the things that you don't actually do in Australia that Americans think you do. You've had a Foster's, like everything is going on. Welcome to 7 Investing Now.
Thank you, Dan. It sounds like, we have lots of koalas running around and kangaroos, and I haven't seen one actually. There's no koala in my backyard, although there are some, occasionally wallabies show by, as you can see the wallaby poo. So in the backyard.
I only mention this because it's one of my pet peeves. So my aunt lived in Australia from the point I was 13 to the point I was like 35, like a really long time. So I sort of got over some of those things, but I've traveled, not an enormous amount, but a fair amount. And when you go to other countries, I've been in England, and the American tourists expect everyone to be like always having tea, or you go to Ireland and they expect people to be like doing a jig while wearing like a leprechaun outfit. Like, it is for such a diverse giant country as the US is, we have a very strange global view, but that is not what we are talking about today. We're going to talk about instead another global company. First of all, we're going to talk about Tesla earnings, or really Tesla vehicle deliveries. You drive a Tesla. You just had the experience of having your Tesla repaired. That is something that hasn't always gone well. Why don't you detail what happened and sort of how did Tesla handle it?
Yeah, so I got rear-ended on the motorway by another car. And it was an experience in itself, because I mean, when you get rear-ended on the motorway, we were actually slowing down because there was an accident ahead of us. And the car behind us couldn't actually slow down in time. So you hear this huge thud noise. Of course, your first reaction is to go, check on your daughter who's sitting in the back seat, because she's going to go and be, so how, and I asked her, how are you? And she said, yeah, I'm fine. And she was really mad. I said, okay, you're fine, then that doesn't matter. She said, I'm mad. I said, this is okay. She said, this is not okay. How can it be okay to be rear-ended and the car is not probably destroyed? So we go out and we check, you're going to ask first the person who has rear-ended us, and their car is like basically mangled, but the person was fine. The first thing was that, well, the Tesla absorbs accidents beautifully. So while you hear a huge thud, my trunk was pushed back in, and rear bumper is destroyed. But if you look at it from a distance, it actually looks like minor scratches. So that is some design engineering marvel there at work. I was very impressed with that. My car was completely drivable, so I drove the car away from the scene. The other car was not. And that's because it had a heavy engine in the front, right? It's taken the impact on the engine, and the bonnet and all have, basically got mangled. From there on, I mean, the experience of getting a Tesla fixed, yes, there are some challenges with that. It's the number one challenge is that insurance companies, the type of insurance I had, basically said that I can't choose the repairer. They choose, the insurance company chooses the repairer. So that's a bit of a problem. So they sent me to a neighborhood body shop, and the neighborhood body shop says, well, guess what? Don't bring the car here because we can't repair it, because Tesla will not send us parts. So that's Tesla's way of actually ensuring quality control. They will only give parts to Tesla approved body shops. So go back to the insurance company says, okay, we're going to send you to another body shop. Now this is further away for me, so I have to drive down 50 kilometers to take my car. But this is a place that repairs Maseratis, Bugattis, Porsches, and Teslas. I said, okay, I can live with that. Mine is not a Bugatti; it's a Model 3, but it's nice. I think I needed 8 parts. I believe the company got, or the body shop got 5 of them within a week or so of ordering. They said, we expect the remaining to come pretty soon. So they asked for my car. They took my car and they said, we're going to give you a Tesla in return, but they didn't give me a Tesla. They landed up giving me a Porsche. I said, okay, fine.
Oh, no.
I can live with, I said, okay, so I can live with an Ice Age car. and so for me, so far, the experience has been actually really good. Well managed from the Tesla side, well managed from the insurance side. Part of, I suspect the problem people had initially was most of the accidents involve Model S's and X's, and they're smaller volume cars. Smaller volume cars are basically hard to fix. Model 3 is no longer a small volume car. Model 3 is getting to mass market sort of volumes. So it's easier to fix because, and there's a Shanghai factory now where almost all our parts going to come from, the parts for cars in Australia. So, I think the experience has gotten better, I would guess, for people, at least with the Model 3s and the Ys, just because of the scale. I think the Model S's and X's are they're like owning specialty cars, right? If a car is only like 100,000 order produced in a year together, right? Then they're small volume, and Tesla changes parts and how they design the cars, and that just causes problems. So that's my take.
Do you have your car back?
Not yet. I just gave it back on Thursday. I gave it to the body shop on Thursday, and it was a long weekend. So I don't actually. They told me 10 days minimum. I'm actually expecting in my mind for it to be at least 2 to 3 weeks. I'll live with the Porsche in the meantime.
If my Toyota Prius gets rear-ended and I bring it to a Toyota dealer, it's fixed in a couple of days. I just not to Tesla hate here, but there are some good numbers from Tesla. So Tesla reported deliveries over the weekend. How good were those numbers?
Well, they were very good, and they were significantly better than what the analyst expectations, if those things matter. Well, they matter in terms of the short-term price movements, right? So Tesla delivered 185,000 vehicles, a new record. And that's important because Q1 tends to be a slower quarter. Q4 is the big quarter, and then Q1 tends to be a slower quarter. So this is a record. Compare that with Q4, which was about 165. Q4, they actually delivered about 180,000, right? The other interesting thing is to think about the scaling that's going on. This is almost double of Q1 2020, right? So the company is scaling. Another thing I want to point out here is 185,000 deliveries. They include only a couple thousand Model S's and Model X's because they didn't produce any Model S and X this quarter because of the refresh. So those are likely to be produced in Q2 and later. So, when you put all of those things together, think about the chip shortage that everybody's talking about. I think this is really, really good, really, really excellent.
Are these lower margin sales because they're cheaper vehicles?
Yeah, so that's going to be the interesting thing. I think when the Q1 report, the earnings report comes out, that's going to be an interesting thing to see. So I have mixed feelings about this. Yes, there's going to be lower margin relative because you don't have the higher margin S and X in the mix. So you typically have 15,000 odd S and X, 15 to 20,000 odd S and X maybe, and in the good days up to 25,000 S and X in the mix that juice up the margins. But a couple of things. I think it seems that Model 3 is holding really well. Model 3 performance is, I think, doing really well. Model Y is scaling really well. And the Model Y still, they're selling the sort of long range and the performance versions, right? So which basically means that those are higher margin. And the China has, so it's like, I think they're selling the higher margin cars for the 3 and the Y right now. But couple that with, I think the negative would be that China is still in ramp up phase, right? So if China's in ramp up phase, then what we are thinking is, well, there's going to be, you're not going to get the full operating leverage, so to speak, right? So we'll see, but I expect them to be gap profitable on a gap basis. I expect them to generate plenty of free cash flow. And yeah, I expect the story to only get better from this point onwards.
Where were these vehicles sold? Do they break that down? Like how many are sold in China versus other markets?
No, so they don't break that down in the production report really, because that's the details. So so 3 is worldwide, right? So Model 3 is now selling worldwide, but Model Y, they've just started selling in China, right? And Model Y is relatively only being sold in US and some in China, right? And this segment, the small SUV segment, right? So small, suburban utility vehicle segment. This is huge because like when I look around in Australia, everybody owns an SUV. So there are no sales of Y. My wife would love to have a Y. She thinks the X is too big for her, and she would love to have the Y, and she thinks the 3 is too low for her. So there's so many people who want to have the Y. So again, I think there's a big opportunity. The rest of the world market, the Asia Pacific market, the Europe market, this has just gotten started, in my view.
How impressed are you by this? Because I don't know if it's something you're aware of in Australia. I'm teasing. We're in a global pandemic. It feels to me like a really weird time to buy like a $45,000 car. Like, again, I bought a new car, but I bought a used car for like, I don't know, $10,000, like, because I needed a car. It seems like a very strange time to buy a luxury car. I kind of expected Tesla to have some like 0 quarters. The fact that they're still hitting records, this is pretty encouraging, right?
Yeah, so that's the amazing, I think here's the amazing thing, right? So one of the advantages of being sort of, I'm not even calling out Tesla 3s and Ys are not luxury. I'd call them what I call them mastige. So they're mass market prestige. I just made up that term based on, actually this is based on something I've read about makeup. so people who sell, makeup products, they use this term. Mastige. It's used in like health and beauty sector. So it's a mastige, right? It's a mass market prestige vehicle. So basically, you're trying to get to that in that segment of people. It's hitting that segment of people who are least likely to be affected by the pandemic. Right? This pandemic has affected people in sort of a disproportionate fashion, right? There are certain segments that have been completely destroyed and certain segments are completely fine, right? And I think a lot of the mass market, sort of the prestige segment of people, these are people, with jobs in, the tech industry and things like that. They can afford to buy these vehicles. And a lot of people realize that the total cost of ownership for these vehicles is actually lower than, instead of owning a Toyota Camry, you are better off actually owning a Tesla Model 3 because your total cost of ownership is just lower over, say, a 5-year period, right? Then I think there's something about branding here. I think this is underrated, right? Like, I mean, people line up for an iPhone, right? Now, or used to, now people go online. But why do people line up, right? People line up because there's just something about the brand appeal. So Tesla has that brand appeal of being green, clean, new technology, the car farts. I mean, well, maybe that's the thing, right? The car farting is an attraction. It does things that you don't expect of a car, and so I think these sort of things have the brand appeal, and more Teslas on the road means more Teslas on the road because other people see it. Oh, see, this is an interesting thing to have. So I think it's just that combined with the effect of people going into the transition to EV is well on its way, right? And I don't mean that 100% of the EVs are going to be Teslas, but the penetration is still like 3% or under 3% or something like that, right? So there's a huge market, and Tesla is basically just chipping into that market and being sort of the leader or the king of the hill has its advantages, right? So I think it's one of those things, early stage market and a good product.
I'll speak anecdotally because we're going to talk what's next for Tesla. But I've noticed an explosion in the availability here in Florida, a tourist area, an area where there's a fair amount of money, of charging stations. So I drive from West Palm Beach to the Orlando area probably once a month. We have a home in both places. And on the Florida Turnpike, which is a public toll road, multiple rest stops now have a significant section of Tesla chargers and non-Tesla chargers. Not many, but enough of the gas stations in that tourist area have significant presence of mostly Tesla chargers. So if you see more chargers, you will feel better about buying a Tesla. Like, I don't have a Tesla. I was on the Model 3 waiting list, but then I moved to a building where I didn't have an outlet. Like, I had a parking space, there's no place to plug it in. And I wasn't gonna wait at the one, or there's two, I think, charging stations at our Whole Foods, and be subject to that. If all of our gas stations, or our Wawas, which is a really nice gas station chain here, if they had a section of 20 Tesla chargers, well, I'd feel totally comfortable about getting my coffee, plugging it in, charging, not having a charger at home. So you're seeing an expanded capacity. That's one of the areas of sort of like what's next for Tesla. But what else is happening for this company over the next couple of years?
The interesting thing with Tesla right now is like, so the number of things. So I'll actually should have said this in the beginning. So Tesla happens to be my largest holding, our family's largest holding. It's also one of the stocks that I love talking about. I'd wholeheartedly tell people to buy, but I'll actually probably never make a formal recommendation for it. And the reason I wouldn't do that is it's one of those stocks that either you get it or you don't. It's not one of those things where you can actually convince. I've never been able to actually convince a single person to buy Tesla shares. So it's a very divisive stock. It's very volatile, and Elon Musk tends to be probably one of the greatest entrepreneurs of the 21st century, but also very divisive. But putting that aside, I think Tesla's at a very interesting juncture right now. So the case for EVs no longer needs to be made. As exactly as you pointed out, lots of chargers showing up, Teslas and non-Teslas. The move for actually putting in chargers was like if you think back when they started building the supercharger network, this was a phenomenal masterstroke, right? It actually solved one of the greatest problems of the EVs, which is range anxiety, right? And then having the Tesla chargers countrywide, continent-wide, it just made traveling with Teslas easy. And then having the technology to, say, oh, you can now fill in almost as quickly as filling in gas was a masterstroke, right? And they're always ahead of the curve there. At some point, that is not going to be relevant because, as you said, exactly the other charge is going to show up. But still, there's There's a lot of things I think about integration that matters, right? And this is where Tesla has done really a great job of integrating everything. So the experience of driving, say, from cross country, where you can actually know which chargers are available, where you can charge, how quickly you can charge, is a masterstroke, because it's very difficult to do with third party. Again, there's so many different technology standards, which is up and down, you don't know. But so that's great for Tesla. But what I think is really exciting, in addition to the uptake for EVs, is the sheer fact that we're going to now see a lot of operating leverage. And by what I mean is, there's going to be more production of cars and less cost, at least in the next few years, going in. And it depends on the rate at which Tesla wants to keep going. But just think about it. There's a Texas factory coming up, right? So a lot of the cost upfront has been made. There's a Berlin factory made up. A lot of the cost upfront has been made. Shanghai factory is being expanded. A lot of the cost has been put in. The installed capacity is at about 1.1 million cars, right? And they're still not at that 1.1 million run rate, which basically means that they're still ramping up. But as these factories come online and as they ramp up, effectively that cost has already been sunk, and you're creating this demand for people, and you're bringing down costs because as you're scaling up, cost for everything goes down. Your ability to negotiate with vendors becomes better, right? And you know that in how even in retail it works, right? I mean, the bigger you are, the better negotiating positions you have.
I ran a factory for 4 years, so I fully understand the size and scale.
The size and scale matters. So I think we're at this point where we're going to see increasing sales at the top line, and we're going to see even faster growth at the bottom line, right? And I think when you look at Tesla's PE, you're so it's like 800 or whatever it is. But when you just think forward, it's probably around 70 or 80. Go out a couple of years, and like it's a 15 or 10 PE, right? And we are still just talking about vehicles. We haven't talked about anything else that Tesla does, which is we're not talking about the huge investment in energy storage. We're not talking about ancillary sales that come from software in energy. We're not talking about what they could do with batteries. We're not talking at all about what they're going to get out of self-driving. That's a whole another topic, right, in itself. So I think there's a lot of different ways in which Tesla can win, right? It doesn't have to win in just one side. And if it wins in all of them, I have no doubt this is going to be the largest company in the listed markets. Like, basically, it being 5x from here would not surprise me at all, which is why I continue to hold Tesla. I continue to argue for it, but very difficult to convince people.
It is. It's funny. I am so on the fence about it. I don't own Tesla, and I don't own Tesla because Elon Musk's ability to blow everything up in one tweet. And I understand you could actually remove Elon Musk from Tesla at this point, and it would probably still be an innovative, like, he's no longer necessary. The vision has already happened, but he doesn't seem like a nice guy. Like, he's just not someone, he doesn't appear to treat workers well. And I understand that's hypocritical because I own Amazon and they have that reputation as well. He just rubs me the wrong way. And I get it. They have the brand. They're going to sell all the cars. I just don't feel great owning it. And it's so expensive. It's easy to justify not doing it. That said, it was a mistake when I didn't do it 2 years ago. It's a mistake when I don't do it now. It is probably a company, but I agree. It's going to be a really hard one to change people's mind. We're going to have you on an episode. We actually do a format called Change My Mind, where we take a stock where one of us is bullish on or bearish on, and someone on the team who has a really different opinion tries to change their mind. My mind changes usually every time, but not always permanently. With that, Anirban, thank you for joining me. We're going to be doing this quite a bit. And for those of you watching 7 Investing Now, I will be back in a moment with our finisher.
And that works, Steve. So in addition to some of the disasters you saw there getting that video to play, you also got to see, like, why is Dan fumbling around on the floor with about 2 minutes to go during the interview? Well, I noticed that my Mac wasn't plugged in, and I got a power warning that I had 3% of power left. So I had an absolute panic of, oh my God, where is my charger? I have to find it. We have a number of questions we're going to take to close out the show before we hit our finisher. Steve, we were talking about the possibility of cheaper Teslas. And I do think $25,000 is reasonable. $25,000 puts you at like the high-end version of a Toyota Corolla. It's still somewhat expensive, but I don't think you're going to see them go much below that because you don't want to see them devalue their brand. Your thoughts there? And Steve appears to be muted. So Steve, if you could, and there we go.
I think that's a good observation that that Tesla won't go, a whole lot lower than 25,000 over the long term. And keep in mind that some of the things that really are going to differentiate them and some of their competitive edge with their self-driving vehicle tech is something that is an add-on. So we're talking about a $3,000 to $5,000, whatever the price is, add-on to Tesla's base price, and people will be more than happy to pay that because, hey, you're buying a Tesla, and I think there's a lot of brand power there that is that's not necessarily taken into account when you look at just a straight up sticker price of a car.
Yeah, and some of it comes down to brand and what you're willing to pay for. I'll pay for Apple products at a premium because I do feel there's value there. It's not necessarily me wanting to be seen in Starbucks, with like an Apple Watch and a MacBook, but there's definitely people that, if their option is a comparable Toyota, they're going to spend $15,000 more for that Tesla, and that's very, very valuable to the brand. Yeah. We have a number of comments from Mike Fee about an upcoming SPAC, Grab. It's a Southeast Asian company that does food delivery. That's not actually one we've looked into yet, but I wanted to use that to seg into another comment from Zufgar. I am, Sam, if you could bring that up, I apologize, I'm having trouble seeing it. I am so tempted to invest in Chinese stocks such as PDD, BABA, and JD. How do you study Chinese stocks? Is it a value trap? You study them the same way you study any other stock. Like, all the information is there. And yes, there's some risk because there is a political war going on, at least somewhat less than it was, but there's still a battle between the US and China. But even if a company was delisted, that doesn't mean your values disappear. Steve, do you own any Chinese stocks?
Yeah, I actually own JD.com. That's, I think my cost basis for that is about 100% lower than it stands right now. But it's a really compelling stock that I think has done a great job at building out its own delivery and stocking infrastructure, and it's a really, really interesting e-commerce play over there. And there are a lot of other interesting Chinese stocks out there, but JD is actually the only Chinese stock in my portfolio right now. But I do think it's one of those things where you have a massive addressable market in its own right. And, delisting from American exchanges is certainly a worry, but it wouldn't, just automatically mean you don't own the stock. It just make it more difficult to trade.
You do need to be careful when you have an authoritarian government, especially in the financial sector, that some of these companies could face regulation in a way you don't see. That being said, I own Starbucks. And if you own Starbucks, you have a massive amount of exposure in China. I own Disney. If you own Disney, you have not a massive amount, but maybe 8 to 10% exposure. Certainly you have a lot of theatrical downside if you don't invest there. Nick asks us, I'd like your thoughts on Boston, Omaha. Steve, this is often called a mini Berkshire. It's more than that, right?
You might say it's like a mini Berkshire. It's very small. People who follow me know that I love me some Boston, Omaha, tickers BOMN. And it's kind of boring businesses that have great returns on capital. So we're talking fiber to the home, we're talking billboards, surety insurance. Very interesting company. Actually just finished raising some cash through a secondary offering. And I think they added $58 or $59 million to their balance sheet to help fund expansion for a couple of their core businesses, and really interesting company with a heck of a lot of room to grow from here. And I do like Boston, Omaha.
ZL, and Sam, don't share this one. He did a great job not revealing our pick, but we don't need to go through it. But ZL wants to know, what are our thoughts on the cloud? And I think the simplest way to invest in the cloud is the big players. You should buy Microsoft. You should buy Amazon. You should buy Google. Like Steve, I know I'm oversimplifying a little bit, but you're more involved in this space than I am. But the actual cloud is a commodity. So the biggest players are going to win. It's really the people who are building infrastructure on top of the cloud that are the sort of more interesting, less dull investments. Your thoughts here?
Yeah, and those are great stocks to own. And not all clouds are created equal, right? It's not just the cloud is the cloud. We had a pretty deep discussion on this in our internal Slack channel at 7 Investing. But as far as investing in the cloud, I do like the big cloud storage, cloud computing, cloud infrastructure plays, but I also do like a lot of the supplemental names. And some of the folks who followed me over the last year or so know that even on our scorecard, I have a couple, sort of cloud infrastructure companies and supplemental ways to play cloud computing's growth, even when it comes to data analysis and big data, artificial intelligence enabled by cloud computing. There's a lot of different ways to play it, and that's something we could dedicate several episodes to in its own right. So kind of tough to extrapolate too much there.
And we will. Would love to hear your comments on the interview we did with Anirban, because we're going to be doing more things with him taped. We're going to talk about what it's like to be investing in U.S. markets from Australia. It is a little bit different. We're going to do one talking about investing in Australia, which is not as easy. The investing structure is a little bit different over there. We're going to take one last question from Mpreneur. And he says, I think the problem with Tesla is service. That is not, and then part 2 is for brand sponsors or global chargers investors, Tesla will be in trouble. Android versus Apple. So let's go with the service. That is a big problem. We just went through Anirban's whole journey where his car got hit, and it's going to take weeks, if not months. And it's great that they're loaning him a Porsche, but I'm not sure that loaning an equal car can necessarily be part of your business model. When I used to drive a BMW, they loaned me a much nicer BMW when my car was broken. So I wanted them to go slowly. They fixed it in 2 or 3 days. I'm not sure loaning you a car for a month is sustainable. So they do need to improve that. But Steve, I don't think chargers are a problem. I feel like if you're building chargers here in the US, you're going to have generic ones and Tesla ones. Am I reading that wrong?
Yeah, you'll have them both, and I think chargers are increasingly a non-issue because you can pretty much go anywhere you want with the existing charging networks anymore. So, and it's only going to get better from here. It'll be like the new gas stations. So, I don't think that's an issue.
Yeah, and I think the ability for it to charge faster is going to happen. I also think you're going to see improvements in home chargers. If you get the regular home charger that just plugs into regular voltage, you charge at about 5 miles of range per hour. If you have 220, that like triples or quadruples. So you can, realistically fully charge in a few hours. There's certainly overnight. That technology is going to improve. We're going to see portable charging stations. You're going to see, you'll probably see cars with swappable batteries where you just pull in somewhere. You're actually seeing that with electric scooters now. I don't think you're going to see that with Tesla. I think you're going to see that with like short range, like the Nissan Leaf type of car that you're using to drive around town. With that, it is time to hit our finisher. We are up on the top rope. We are waving to the crowd. Here we go. This was a silly one. What's the best national pizza chain by taste, not operations? By operations, it's clearly Domino's. And most of you think by taste, it's Domino's. This actually started out overwhelmingly in favor of Domino's. Papa John's made up some ground. Pizza Hut made up some ground. Here's the thing. The 6.1% of you who said Little Caesars, have you eaten pizza anywhere else? Because Little Caesars is an abomination. that is like, it's 2 a.m. My choices are gas station sushi or the Little Caesars. Like, Steve, do you have a favorite on this list? I don't like any of them, but if I had to pick a favorite, I would go with Domino's.
I'd go. I mean, I like Domino's, but I like Papa John's more. So just the pizza itself, like my kids want that garlic dipping sauce. So that's pretty much where we end up going if it's not a local place.
And Steve, we'll close out with one last question from ZL. Sam Bailey, sorry to put you on the spot there. Tencent is down 7% today. Do you think it's a great play in the China space? We're not overly concerned that it's down 7% today, but Steve, what are your thoughts on Tencent?
Tencent is a really interesting company and one I've almost bought a number of times myself. It's a heck of a lot bigger than you think. It's funny because the reason it's down 7% today is that one of its largest shareholders is cashing out its stake after kind of a big pandemic rally. So they're selling like a 2% stake in the company, which is like $14 or $15 billion. So that shows you how big this company actually is. I think they own like a 40% stake in Epic Games, which is the maker of Fortnite. They're basically this huge video game giant media conglomerate in China. Fantastic business, really, and one of the kind of certified legitimate companies and ways to sort of play China growth, specifically in media and video games. So interesting company. That's the reason they're down, is because one of their biggest shareholders is kind of cashing out a $15 billion stake. But I wouldn't think much of it because they could just as well be wrong. So.
Final comment here from Joyce Hine. I believe she's talking about Little Caesars. It's cheap and it's still okay. When the pandemic ends, we will be doing a 7 Investing meet and greet somewhere in New Haven, Connecticut, the land of fabulous pizza. I lived in Connecticut for a decade. I worked in New Haven for 4 years. It was always, we would bring in our customers and buy, 150 pizzas and just, have all the customers over. That is the best place in the country to get pizza. Take that, Chicago. With that, Chicago, first of all, deep dish pizza isn't pizza. It's like lasagna mashed with pizza. It's fine if you think of it as a different thing. Like nobody calls a calzone a portable pizza. Like, you have to think of it as a different thing.
If you haven't noticed, Dan is a pizza snob, but I'm more you put pizza in front of me, I'm going to eat it no matter what. So sure, it's cheap pizza. It's still okay. But Dan's definitely the pizza snob. So if you want to have good pizza, go with him. I
am. We could meet in Boston, go to Santarpio's, go to Pizzeria Regina. There are some selections. That being said, we've run out of time. It is the end of 7 Investing Now. Steve, if people want to become subscribers to 7 Investing, they get access to all our picks. They get access to members-only calls. They get Max Chatsko's home phone number and his address. Maybe we don't give them that. How would someone sign up and subscribe?
Just go to 7investing.com/subscribe. Pretty easy process, $17 a month or $170 a year. And you get access to all of our recommendations, both the current and our past recs. We also talk about our most intriguing stocks today, culled from among our last recommendations as well. And there's a lot of value there. And you also get access to our team. We get to talk to you. So a lot of fun. And we love our member base. Thank you for your support, everyone.
If you'd like to get in touch with us, you can reach us via email at info@7investing.com. That's usually Steve. That's really for questions about our service, about your membership, about something we did or said. Generally, it's not a place to ask us to look into a stock. If you'd like to interact with us, you can interact on @7investing.com on Twitter. We are very active on Twitter. We appreciate you voting in our polls. Steve is going to be back on Friday. Matt Cochran is going to be joining him. Simon Erickson is going to be joining. It is going to be a jam-packed show. Sam Bailey, we appreciate you putting up with all the technical difficulties we had today and getting through it. It was not the show we expected, but it worked out great. Thank you for watching. We will see you Friday.